Welcome to Kitchen Table Finance, the podcast where we serve up bite-sized pieces of financial advice to simplify your money and your life. Join your hosts, David Shotwell and Nick Nauta, and let's get started.
Hey, Dave, how you doing today?
I am doing great, Nick. How are you?
Fantastic. Welcome to summer. Welcome back to the show.
I know. It's a beautiful sunny afternoon. Let's sit around and talk about money and, better yet, health insurance.
Yeah, health insurance for retirees, one of our favorite/least favorite topics. Favorite because it's super important, we got to do it, and least favorite because it's very complex and there's lots of different pieces that you really have to pay attention to when you're putting together. And I guess the least favorite also, as we were just talking before we started recording too, just because there's so many different possibilities and it's so hard to get the exact answer, especially when you're dealing with state employees, because there's so many different, it's not just like one employer group, right?
So many different plans, it's levels of complexity. So, for a high level overview podcast, we're going to do the best we can here, at least elucidate some of the issues people need to think about. But at the end of the day, we take this on a case by case basis, right? When we work with a state of Michigan employee, in that we start the planning process, figure out what we need to know about their health insurance, and then get on the phone with them and find out exactly what their situation is.
And there's lots of information out there on the state's website as a government entity, but always trust but verify, right? Like, it's a great place to start getting some information, but until you actually verify it, you really need to be careful. And so kind of our game plan for today is, and this is how we take it with clients too, Dave, is we want a plan of action of like, what do we think we know? What do we know we don't know? And what questions do we need to get answered in order to move forward with confidence, right? And going into those conversations and phone calls and going into those different, seminars and things that the state puts on with a bullet point of like, this is what I think I'm going to do. And here's all the questions I need to get answered so I can get all of the proper information to make a decision that's best for me. So with that, large disclaimer, Dave, and this is, healthcare is one of the biggest retirement questions that we get.
It is.
It's changed a lot in the last couple of years, which adds a little bit more complexity. It's changed at the state of Michigan, relatively recently. What was it, 2011-ish, I think maybe was the last change. So, and then we have added into all that is the, marketplace insurance. And so there's lots of moving pieces and parts and changes and stuff that you really have to kind of plan for. And realistically, there's kind of two different sets of healthcare when it comes to retirement, right? There's your pre-65, which is before you're eligible for Medicare. And then there is 65 and older, which is I have Medicare, but there's also, because heaven forbid a government benefit be simplified, but like there's all these different gaps in coverage, and that's where you add in the Medigap, the Medicare Advantage, or, your state retiree plan while you're on Medicare. So it's kind of in two parts. And so we're going to talk about both of those parts and some things to think about. And then the other thing is there's different kind of pieces and parts of the different ORS plans, right? And so thinking through kind of what that looks like. And so just to lay it out, that your options before Medicare is the ORS retiree insurance, right? And so when you leave, if you qualify, which we'll get into in a little bit, you can get insurance through the ORS, right? And there's different, depending on what plan you're in, and there's three different kind of options that we'll talk about. You will have insurance through the state of Michigan ORS plan. Your other option is to go to the health insurance marketplace, which we talked about. Obamacare is commonly referred to the health insurance marketplace, where you can qualify for insurance. It's obviously you have to pay for it. and you pay for it based on your income. And so there's different premium subsidies. We've done some podcasts on that before, so I'll try to link that in the show notes. We're not going to go into detail, just know it's out there. Know everybody basically qualifies for it, but you do have to pay for it. And then there's other alternative options, right? So if your spouse's employer has retiree insurance or they're still working, obviously that's a consideration. There's some alternative types of plans that don't necessarily go through the marketplace, concierge care type of services. So there is some other kind of alternative stuff out there, but tread lightly, and we're not going to go into too much detail there. But those are kind of the three big ones, right?
Odds are, if you qualify for ORS coverage and you're not Medicare age yet, that's probably going to be the most robust coverage you're going to be able to get at the best price, most likely.
And then after 65, so if you qualify for Medicare at 65, you get to sign up for it. And then you have three different options there. You can go with the ORS retiree insurance. You can go with the Medigap Medicare Advantage plan, or if your spouse has a plan, or one of those other alternatives we talked about. The other thing to think about is who is on your health insurance, right? So the state of Michigan has very good insurance benefits, and it's very common if you have a spouse or dependent children that you're all on the state of Michigan insurance plan. And so if you leave that plan and you retire, what happens to your beneficiaries, right? So health, prescription drug, dental, and vision coverage for your spouse and eligible dependents is the same as yours. So you can still carry those on depending on those rules, unless your spouse is also enrolled as an eligible state employee, and they would have their own state coverage. Whew. Laying the foundation.
Oh, we're just getting started, my friend.
Yeah. Laying the foundation. So what is the ORS retiree insurance, and kind of what are the permutations of it, right? And so there's really three, I like to think of it as three different plans, right? So if you've been there long enough and you have the pension and you stuck with the pension plan when you had to make that choice, you also get a premium subsidy. Essentially what that means is when you meet age and service requirements, the state will pay a portion of that coverage. And so the more years of service you have, the higher the insurance subsidy. And it basically goes, if you have 10 years, you get about 30%, all the way up to 27 years of service, you get 80%, meaning if your monthly insurance bill is $1,000, the state of Michigan will pay $800 of that $1,000, you will pay $200.
And then there's the folks that transferred to the defined contribution plan instead of the pension plan, but retained the defined benefit plan for their insurance subsidies.
Yes. And so with that, it's a little bit different because it's not necessarily tied to the pension, but the same kind of subsidy applies in terms of how much you get. And then there is a third subset of folks who either started after they made some of these changes and are automatically enrolled in the personal health care fund, or made the decision to change from the insurance subsidy to the personal health care fund, which is essentially a way for you to save for healthcare expenses in retirement. You don't get then those subsidies. And so what that means is, the idea is you save all this money in your 401k plan, invest it, it grows, and then you can use those funds to pay those premiums. So kind of the state contributes to that to offset some of those premium subsidy accounts.
Yeah, it essentially made a defined contribution plan out of the healthcare subsidies. They're going to contribute while you're working a certain amount, and then it's up to you to then use that to pay for health insurance in retirement.
The nice part about that is it is a little bit flexible in that, like, you don't have to choose the state plan. You could go to the marketplace, or if your spouse has a plan, you don't necessarily, have to use those funds for that. But that's kind of the intent, is instead of giving you the subsidy, we'll give you some money in your 401k that you can use for health insurance costs later on. So the first thing that you need to do, and the first question that you need to ask is, what plan am I in? If you're not sure, you should look it up, especially as you get closer to retirement, and understand what plan you're in and how that impacts your retirement age and time frame and healthcare costs in retirement. When you're thinking and contemplating retirement, you're thinking about when you're going to retire. Obviously, if you have under 27 years, right? So if you're sitting at 20 and you're thinking about retiring next year, how does working an extra year, like how does that impact the healthcare costs in the overall plan, right? So thinking through some of those things. So it's super important to understand if you're in that plan, what those decisions mean when you make those choices. The other thing is kind of the logistics behind what happens to your coverage when you retire, right? And so you do need to file and let them know what your choices are and apply for retiree health care at least 1 month before you terminate so you have continuous coverage. If you don't do that, sometimes you get a lag of up to like 6 months. And so that's kind of one of those where you want to make sure you're in contact with ORS and doing all the right paperwork and applying for the right things. And then the other kind of big hang up too is that transition from the healthcare plan to Medicare and making sure you're getting those deadlines. That we have seen can screw up some different things. If you don't apply, there's penalties on the Medicare side and it messes with current insurance you have. So there's lots of things there that you want to make sure you're aware of around your 61st birthday and you don't miss those deadlines. So I think one of the other big kind of questions is when I do hit 65, so if I retire before 65, I hit 65, like what happens to my health insurance?
Which you'd think would be automatic, but everybody turns 65 on their 65th birthday. It's not magic.
And that's another one of those, like if you're in the personal health care fund, we're going to talk about here in a little bit, but it's just one of those other decision points of like, how much is the ORS coverage versus what I can get in a Medigap or Medicare Advantage, and comparing those plans. And we highly recommend working with a professional that understands those plans and can, kind of evaluate those. And so that's another one of those kind of decision points at that point. But the big thing is making sure, Medicare becomes your primary coverage at that point, and your state kind of sits in the background and covers anything, or most things that Medicare won't cover. And so it's kind of a flip of what you're used to of the state plan being your only insurance. And another, just making sure you are being very communicative with the state as those things are changing. All right, Dave, we've kind of gone over some of the basics, but we do want to focus on some of the decision points that sometimes we kind of miss in all of this. And really what that comes down to, and kind of the question that you want to make sure you're asking, especially, especially if you're in a situation where you're not the only one that's going to be using your insurance, and especially through retirement. Like, what happens if I die and I'm the state employee, and what happens to my coverage for my beneficiaries, right? And this kind of goes into that trust but verify piece, because we found a ton of different information, and all three of these types of plans that we talked about have different like things that potentially happen. So you really want to make sure you understand that if you're making a decision for someone else along with yourself.
So really it's easiest to think about it as though you have two parts, right? You've got major medical coverage through Medicare, and then everything else that isn't covered by Medicare falls under the ORS plan, hopefully.
Yeah, and eligible beneficiaries for that matter too. I mean, you're talking about 26 now, and so you have situations potentially where your kids might be on a plan. And so, without going into too many of the details, there's a couple things that kind of red flag isn't necessarily things that I would want to know for my clients, right? So, like, these are the questions that I would ask them that we'd have to go to ORS with. And the first one is, if you have the pension plan, right, the death benefit or the defined benefit with the premium subsidy, how does your pension election impact that, right? So if I take a straight life pension and I die, does my health insurance continue for my beneficiaries? And all of the things that we were able to find online, it kind of indicated that you had to choose a survivor option in order for the healthcare to continue. And so that is the very first question I would be asking if I was on a pension and making that pension decision of, do I want straight life, which is obviously a higher amount, or do I want survivor benefit? Because, you can see the situation where you think you're going to live longer, and if you don't, that can cause a big problem, right?
Bottom line is you want to know what's going to happen to your spouse's coverage if something happens to you. Are they going to be able to stay on the plan or not? And yeah, that's a key piece of the plan to understand.
The other kind of piece of that is, what if I don't have the pension, but I have the premium subsidy plan and the 401k defined contribution plan? That's another one of those, like, what happens to my coverage? There's a couple different things to think about too, because all of these plans, if you die, so if you have the premium subsidy plan and you die before you retire and start taking those, like, what happens to that benefit for my spouse, right? And obviously you don't have the pension, so you can't choose a survivor benefit option, so they automatically get that coverage. And everything that we were able to dig up indicates that you would, but again, something that you would want to verify. And it also kind of depends on, if you die while at work, how many years of service do you have, things like that you're going to want to make sure before you hit retirement age. And so with the personal health care fund, it's a little bit different, because all of that money is just kind of put away in the 401k. And if that's your beneficiary and you're retired and you're using that money to supplement health insurance, it's a little bit different. But that's one of those big decision point questions of, like, we need to check this box, figure out what the answer is, and then we can update that into the planning and make some assumptions and make some risk assessment of what happened to you, what's our plan B, plan of action, and should we make a different decision because of that. There's some quirky rules, again, if you have the personal health care fund and you die while in work, before you retire, and how that's impacted in some different decisions there. But for the most part, if you're getting ready to retire, you're probably past worrying about those kinds of decisions. And there's not really like a decision that you can make beforehand. Just some helpful things to potentially know. So with that, I know there's a lot of information. I think the biggest thing, I'm just going to kind of lay this out of, here's the questions that you want to ask. And like you said, Dave, what we really like to do is work with our clients, develop a plan, and start thinking through some of the costs, and then verify all those things. Because, if you're a state employee or a judge or a teacher, like, all these things are similar yet different. And you just want to make sure you have those answers in hand. One thing we didn't talk about that is on my list of questions, Dave, is, what happens if I get to retirement, I find better insurance outside of the state, and so I decide to take that? Can I come back to my state plan? And this is really kind of, thinking doomsday, because that's kind of what I do, of like, hey, we got a subsidy for Obamacare, we're going to take that coverage, and then in 2 years that went away, or Obamacare in general went away. Can I go back to the state offered health insurance? And that's another big kind of, if you're making a decision, is it permanent? Is it something that you can, hold off on? For example, here's a better example than that one. If your spouse is still working and you want to go on their health insurance for a couple of years and then they retire, can you get back? Those are things that you're going to want answers to before you make those decisions, because some of those decisions are potentially irrevocable, which can be a bummer. So with that, Dave, I'm going to go down in order. I've got 6 main things, and we always usually end up having 1 or 2 to add on to this. But the first one, just kind of recapping, is, what plan am I in, right? Like, do I have a personal health care fund? Do I have the premium subsidy? What am I in? And what are the eligibility rules for retirement, right? And this is something that we didn't necessarily talk about, like, how many years of service versus age do I have to have before I qualify for anything?
Yeah. And it's another element where, when we're talking to a client about the timing of retirement, well, does another year of service pick up more of a healthcare premium subsidy? That impacts things as much as savings and spending sometimes.
what changes with Medicare, right? Like, what do I have to do to make sure that I get this transition from ORS retiree health care to Medicare being the primary? What coverages do I sign up for? What coverages do I not sign up for? Being sure you're very specific on what you need to do and what the state will do, and then following up to make sure it gets done properly. The fourth question being, what happens if I die to my spouse dependent healthcare insurance? And there's really,
Yeah. Are they going to continue to be on the plan with the same pricing? How's that going to play out?
yep, what happens before retirement, what happens after retirement, and also what choices impact what happens, if I don't do survivor benefits on my pension plan. The fifth question, which we already kind of went through a little bit, but what happens if I elect different coverage option outside of the state plan? Can I come back? Like, what? How am I? Do I lose eligibility? What are the eligibility rates if I don't use the state health care insurance from the get go? And then lastly, how much will I pay?
Bottom line.
But this is important for two reasons. One, if I really truly want to compare all of my available options, I need to know how much I'm paying, because just because I get a subsidy doesn't necessarily mean that's going to be better than an alternative option. And so there's some, I'm always a big believer in get as much information as you can, because that's going to help you make the best decision. And for these healthcare decisions, I'm also a big believer in talking to someone who is an expert on healthcare, which is neither you or I.
Not us. No, but we know people.
Yes, because what you really want, when you're comparing coverages, it's really hard because it's not always apples to apples, right? Especially if you have some sort of medical issue, different insurance companies treat those things differently, and making sure you understand that as you're making that decision. Prescription drugs, all of those things can impact what plan choices you make, not necessarily just price or per monthly premium, right? And the second reason that's important is, in order for you and I, Dave, to create a plan for retirement, we're going to want to know how much your healthcare costs are going to be in retirement, right? And we are going to want to know how much the out-of-pocket stuff is going to cost. Like, what's your worst case scenario? What's your max out-of-pocket? How do we put that into the plan, and how do we use the proper inflation amount, so that, because I'm sure most of our listeners are aware, but medical expenses are going up way faster than what normal everyday expenses are going up. And so making sure that we're accounting for that type of inflation in our plan is super important. The other part of that too, Dave, is your insurance coverage guaranteed, right? And so what I mean by that, and this is more important the further away from 65 you retire, right? So like if you're 64, chances are we got a pretty good idea what's going to happen in the next year in terms of health insurance. If you're sitting there at 55 and you got 10 years until 65, there's a whole lot of things that can happen in 10 years. And so we want to make sure that, and that's that decision of, do we use the state plan? Do we use an outside plan? Which one do we know is going to be there, or have more faith is going to be there? And what does the fallout look like if it's not? And that's much more of a decision point around, using the marketplace for insurance than it necessarily is for the state retiree plan. Like, I don't see any reason for that to go away.
And really, that concept applies to every aspect of financial planning. You know, 5, 10 years out, there's so much that can change, but we can at least create a model, at least get some scenarios down on paper, and start thinking through the issues.
Yeah. So I know that was a lot, but hopefully, you've got some questions that you can ask, and you can start building your own list of things that you want to make sure that you know before you decide to sign on the dotted line and retire as it relates to your health insurance. And you're hopefully working with someone that can help you model out those different things, and how those decisions impact your overall plan for retirement.
Health insurance. You did a commendable job of summarizing something that is almost impossible to summarize. I'm impressed.
It is. There's a lot there, and thankfully too, we've had interactions with ORS and their people, and they do a really good job of getting you the information you need. And so, and I know they do different seminars.
Yeah, that's the plus side of all this. While it's really hard to parse out what applies to you and what doesn't, just looking at the information online, a simple phone call will clarify. Yeah, they'll be able to tell you exactly your situation.
Well, and I can tell you from playing around with Chat GPT, because I know there's people out there that would do this, you are going to get some things that don't necessarily make sense and aren't correct. And so it's a great tool for like helping you come up with your questions, but do not rely on the information that it spits out.
Do not rely on that, and
Yeah.
particularly around health insurance. I wholeheartedly agree.
Yeah.
Health insurance and taxes.
So that's our public service announcement for today. So with that, Dave, it has been a pleasure.
All right. It's been fun. Thanks, Nick.
Thank you for joining us for another chat about your retirement and finances. Please hit that subscribe button. You can also contact us at srbadvisors.com or email us at info@srbadvisors.com. See you next time on Kitchen Table Finance.